I'm not worried about an all-time high having been in. If anything, I see the fact that we've stayed around 1900 plus or minus for gold now for months, for all of Q3. The average gold price in Q3 was over 1900. So just imagine what the producers are going to deliver.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. As we roll into early October, wow, it's amazing, coming towards the end of 2020. Interesting year it has been for gold and silver and for the mining stocks, which makes it a great time to have my friend Louis James, aka Logo Tigre. I got a little bit of the roll on that one. I was practicing, and in either case, better than my attempts at Spanish is that Louis is here. Great to have you on today, Louis. It's been a couple months since we last talked the markets, and looking forward to hearing your perspective on where we are at with things. But more importantly, how are you doing today, my friend?
I'm well, Chris. I'm happy to be back. Got a lot on my mind. Happy to share. It's a crazy world, crazy year, but for long-suffering gold and silver bugs, not so bad.
Well, I certainly agree. One quick note before we hop in. Today's episode is sponsored by Bluestone Resources. That is Jack Lundeen and his Cerro Blanco Gold Project. Jack has been on the show before, and certainly for investors looking for leverage to the gold price, well, it is a bit lower. Bluestone, a company to take a look at. We'll link to the interview to that at the end. And with that said, now, Mr. James, we've seen new all-time highs for the gold price. Silver moved finally, but where do you see this rally? Some people are wondering if the correction is going to keep going. So I'll let you take it from there.
Well, my first point would be that we haven't seen an all-time high in gold. We've seen a nominal high. Yes. And even just from 2011, not that long ago, inflation already makes that not a new real high. And I think that's important. We look at real rates in almost any other financial transaction or situation. I think we should look at real prices when it comes to gold and silver. And to beat the 2011 high, gold would have to rise above 2158, I think was the last number I looked at, something like that. And by the way, to beat the 1980 high, it would have to rise over 2700, a number I've seen other people reference as well, and silver proportionally. And that's if you trust the BLS numbers. If you were to use shadow stats, and I understand there's some controversy there, but still, just using the government's own numbers, which are the friendliest case someone like you or I could use, I mean, from the government's perspective, to use their numbers, we're still haven't reached a new all-time high. So I think that's important to keep in mind. If you're thinking that an all-time high signals a top and therefore it has to go downhill, well, we really haven't, and I mean really haven't hit that yet. So I'm very optimistic on that basis. But more importantly, the whole situation is one that almost couldn't be more bullish. We have an insane level of easy money, real rates at zero, and nominal rates close to zero, practically zero, and we have Congress opening up the spigots. Okay, there's some bickering now about whether it's 1 trillion more, 2 trillion more, or whatever, but there's trillions more coming on top of the trillions already done.
What's the difference?
So, I mean, the situation really could hardly be more bullish, and other governments around the world doing the same thing. Don't forget, gold has hit all-time highs in other currencies. It's just the dollar where it hasn't quite topped yet. So the situation is extremely bullish, and it's not going to change anytime soon. It's not like the vaccine, if there is one, will suddenly make everything fine overnight. And even if that's a long rabbit hole to go down, and we can discuss whatever aspect of this you want. I'm just saying that the best case scenario is still a long uphill struggle here, and government's not going to any kind of austerity anytime soon. And that's extremely bullish for the monetary metals. So no, I'm not worried about an all-time high having been in. If anything, I see the fact that we've stayed around 1900 plus or minus for gold now for months, for all of Q3. The average gold price in Q3 was over 1900. So just imagine what the producers are going to deliver. Now, many of them already delivered records for Q2, and they're going to smash those records in Q3. Gold's almost $200 more per ounce for the entire quarter. This is a big deal. It's much better than some spike up to 2,500 and then down the next day back under. For gold to be holding historically high nominal levels is fantastic for our whole space. And okay, silver hasn't quite risen that far yet, but we all know that silver lags gold and then overperforms in the end. That's a well-documented trend. And silver's doing fine. I mean, over 20, 25, we pushed close to 30, we gave back some, but there were, all the silver producers batten down the hatches, and they were dealing with, 15 plus or minus dollars silver. So now you give them 20 plus silver, and everybody's better off, substantially better off. So no, I'm extremely bullish. I'm not worried about a peak at all, not yet.
Yeah, and Louis, so many great things you mentioned in here. I guess it's fortunate we have time to do an interview today. I'm writing notes as we go along. I have so many thoughts about what you just said. First of which, you said, what else could the Fed do that couldn't be more bullish? And then sure enough, like clockwork, here was today's headline. Fed Powell says U.S. faces tragic risks from doing too little to support the economy. Of course, I'm assuming we can translate their definition of support the economy as printing more money to prop things up. And interesting, even with all the shutdowns, we have S&P. Well, I guess S&P did hit a new all-time high, slightly below that. But I mean, what happens, or maybe we're seeing it happen now, what happens when the metals start reacting like these stock markets have?
Well, I would argue that they have actually. If you don't look at the daily fluctuations, for some reason, gold and silver are off as you and I speak. Powell opened his mouth. The Dow and S&P are up at the moment, but not gold and silver. But that's a daily fluctuation. If you pull back and look at the bigger picture, ever since the Powell pivot, really late 2018, is when things really started getting going here, and that was, for anybody paying attention, that was obviously bullish for monetary metals and other assets. And so you've seen the situation where gold, a safe haven, right, has moved up with risk assets. It makes people think, well, what's going on there? What's wrong with that? Well, nothing's wrong with it if you understand where does the easy money go. And gold is a financial asset, and gold stocks are stocks after all. So the overall pattern actually makes some sense if you think about, not that the government's actions are good. I'm not putting my blessing on the easy money policies. I'm just saying, given that, then it's not really that surprising at all. Why today, who knows? We can pour through the tea leaves, and, maybe Powell said, happy instead of glad, and therefore gold should sell off. It's hard to say on the moment to moment, but the overall situation hasn't changed at all. And yes, the other quote that I liked from Powell was that, Congress couldn't overdo it. That's got to be the sweetest music possible to any pork barrel politician's ears. It's the Federal Reserve is telling me I can do whatever I want. I can spend all I want. It's kind of like that Pringles commercial, Doritos, eat all you want, we'll make more, right? Spend all you want, we'll make more.
Print more. I mean, it's funny. I was kind of giggling when you said, maybe someone was reading the tea leaves and they changed glad to happy or something. And I mean, it sounds wild yet. And then I'm like, actually, that's exactly how these guys react. If I had not lived through it myself. Louis, you mentioned some of the earnings that we're about to see. And yeah, I think it's going to be interesting, especially, I mean, if you're comparing it to a quarter where a lot of the mines were shut down, and you could say that's being priced in. I'm not sure that the average guy really does price that in like you or I might. But perhaps over to silver, maybe you could put it in perspective. I mean, we heard a lot when silver went from $17 to $18 even. The companies were talking about how much that helped. So, all right, 29, 22, 24, whatever that averages out to over the third quarter. Can you put into perspective how much money some of these companies are going to be making compared to really what we've seen for several years?
Well, that would be a pretty forward-looking statement there, Chris. These analysts that put these targets on, they're always wrong, and I really don't want to join that game. But there's an easy metric here. Anybody who did really well for Q2 when the shutdowns were at their worst, anybody who broke records then or just made money, those guys are clearly going to have a much better Q3. But let me actually pull back from silver to we can talk about silver, but let's pull back and look at the bigger picture for a second, because I think this is really important. The broader markets, all this talk about the V-shaped recovery, a V-shape in stocks isn't a V-shape in the real world. And ultimately, these companies have to deal with the real world to justify their valuations. And okay, a few fly-high, stay-at-home trade tech stocks might blow it out of the ballpark. But most of the real companies on the S&P 500, I think Q3 is not going to be very kind to them. And they're all going to want to talk about how much better it was in Q2. Oh, look, we're up 50% from Q2. Well, yeah, you're being up from a disaster isn't too hard to do. But look at their Q3s compared to Q3 last year. I think what we're going to have is a situation where you're going to have a lot of companies that are visibly, not V-shaped, but square root, right? And the square root is lower than the start. We have a big crash, we have some recovery, but we're not back where we were before. I think a lot of companies are going to disappoint compared to Q3 of 2019, except in the gold and silver space. So I think on its own, that's really interesting. That's very bullish for our stocks and really for the whole sector. It kind of spills around. People start paying more attention. Now, on top of this, we have the great Warren Buffett's blessing. Now, I know that, I don't want to get carried away with this. I know that, there's a good chance that Buffett didn't even know this transaction happened. One of his minions did it. I understand that if it's just $1 billion or less, they don't even have to ask him. It was only 500 million shares worth of shares of Barrick Gold that Berkshire bought. Peanuts. But the market psychology of this, the impact of this is enormous. And this perception, rightly or wrongly, that Warren Buffett has done an about face on gold, I think is wrong. I don't think Warren Buffett's done an about face on gold at all. I think his lieutenants saw a profitable sector that was just gushing cash and decided to jump on that bandwagon. But it doesn't matter. Warren Buffett bought gold, right? The ticker is GOLD. and people follow Buffett, right? He's the Oracle of Omaha, and he's one of the most respected, followed investors. Now, don't send me hate mail about what an idiot Warren Buffett is or what a socialist he is or whatever. I know that Buffett has imperfections. I'm not here to defend Warren Buffett. I'm saying that this idea that Buffett bought gold is out there, and it's something that institutions and investors pay attention to. So you have that, and at the same time, you have this Q3 situation where gold and silver producers, many of them should produce smashing results. This could really be, this could be a time that could make a lot of us very, very happy shareholders.
Yeah, I know what you mean, because it legitimizes it to some of these fund managers that, if they buy gold stocks and it's like, oh, there's crazy Ron Paul and the gold bugs versus
or sorry, let me jump in, Chris. Sorry, even if you're the manager, you get it. Like you might have looked at Barrick and Newmont before Berkshire Hathaway did, but you couldn't go to your investors and say, oh, look, I bought a gold stock. Your investors are mainstream mom and pop types, or they're going, what? You did what? You're fired, right? But now that Buffett's done it, well, look, yeah, Buffett's done it. It's okay now.
Yeah, I completely agree. And maybe another day we can dig into if Buffett really believes that. I have a hard time after what I've read about Howard Buffett, his father, who sounded like the Ron Paul of his day, that Warren's really that confused about how it all goes. But we'll leave him aside for now. I don't want to get you in more trouble with the Buffett fans. But one thing that I've been excited to ask you about for a couple of weeks or months even now, I'm going to pull up the uranium chart. Let's see if we can find that, because as we've discussed before, I'm a big silver fan and think that the dynamics are setting up a situation in which, well, I don't know. Did we not see a degree of a pop? Okay, it didn't hit 50 yet, but to the degree that, all these things were building and it didn't move a little bit when it finally...
A 7-year high is more than a little bit. And I'm pretty sure those are not zinc bars I see behind you.
No, that's the real thing, man. So you can come on over and, it's interesting to think, if you took those bars and then the uranium price chart where... again, now uranium below cost of production, which silver had that for various points over the past few years. But here we see back in 2007, was 140 the top that or I'm seeing?
Yeah, just shy of 140.
Okay.
Yeah, that was right.
Can you walk folks through what happened leading to this? And then maybe you think silver, I know you said yes and no before we started. Maybe you could expand on the similarities or differences you think this might be to what you see playing out in silver.
Well, this is one of those situations where, like history, it may not repeat, but it can rhyme. And the context you're looking at, that spike there, like, could this spike happen in silver? It's a very exciting idea. It would make a great headline to be able to say, yes, this is what's coming for silver. I can't quite give that my blessing. Silver bugs, don't hate me yet. I do have good news for you. But bear in mind that when that spike took off, you had decades of underproduction in the uranium space. Uranium can actually be a byproduct of some rare earths and gypsum mines and other things, but it's not. It's not really economic that way. Uranium is produced pretty much as uranium, or sometimes within vanadium deposits too. But pretty much it's a primary product. The value for most uranium mines is the uranium. Whereas silver, as you know, is largely a byproduct. Most of the silver in the world is produced by the giant copper mines and the lead zinc mines that we call silver mines. Most of the metal coming out of those is lead and zinc. And even the ones where most of the money value is silver, they still sell the lead zinc byproduct, and it's an important part of the economics. There are very, very few silver mines in the world that you could throw away the other metal, treat it as trash, and just sell the silver and make money. Yeah. Most of the silver in the world comes as a byproduct. So that's very different from the uranium situation. So you have a situation where there was undersupply for a long time. Demand was coming back. Demand never really entirely went away. The nuclear power plants are still there. Even without growth, they needed uranium, hadn't been produced for a long time. The downblending of Russian nukes went away, and suddenly we needed mine supply. And at that point, you had this, like, the single biggest, highest grade uranium mine in the world that single-handedly produced like 13% of the annual output for the world, was flooded. It was the Cigar Lake mine, had just been built, it was just coming up, and it got flooded. And so you had this confluence of factors of demand and undersupply, and then what supply there was suddenly constrained, and boom, uranium prices go vertical as per that spike you saw. So the first answer, the no part, is no, I don't see a situation like that. There's no one silver mine in the world that could be shut down that could have an impact like that. Again, most of the silver comes from copper mines. But there is a bright side here. So the yes part, the no part is I don't see that. And by the way, I don't think as a silver investor that I want a spike like that. What happens on the other side of the spike? I'd much rather see a situation like we have right now with gold, where it goes up to 1900 and stays there. I mean, 1900 is a fantastic price for most of our mines that are in operation now. Were designed at 1300 or less. What a great windfall. I'd much rather see a spike half as big as what you've got there, but then it stays there. And I do think there's something like that possible in silver. So here's my good news. Because silver is largely a byproduct, we have this COVID situation. I described the square root scenario, right? If the economy, the global economy, was stopped because of the COVID shutdowns and then restarted again, and it recovers to 80% of its former level, woohoo, 80% recovery, woo. That's still 20% less than it was before. And you know what? It might be might be 30% less. I don't know where it's going to settle out. I do know that the global economy is a giant, complicated, fragile machine, and you can't just shut it off and start it on again like a light switch without things breaking. So I believe that there's going to be, even if there was a 100% effective widespread vaccine tomorrow, which is not possible, but even if that happened, I think we would see a long and lingering and painful recovery ahead of us before we get back to real growth pre-COVID. What that means, though, is less demand for industrial metals, for, things like copper, lead, and zinc. Zinc is used for galvanized steel, all these different applications. If we do see reduced demand for those, you'll see less mine output. You may see more mines shut down. You might see more COVID mine shutdowns, which could put a real squeeze on the silver supply. Now, this could happen even if silver prices are rising. If the money printing you and I talked about before has monetary metals rising in response to that, you could see a situation where silver prices are rising and silver supply is declining. Its supply is inelastic, as our economists say, because of this byproduct aspect. And that circumstance where monetary metals are rising and there's a perceived supply constraint on silver is exactly what sent silver into a mini mania after the crash of 2008. Not right away, but as the recovery dragged on, as things were still bad, 2009, 2010, silver went screaming way ahead of gold because there was this rising gold and silver price environment, but the economy still sucked, I think is the technical term. And there was a real concern about silver supply. Perfect storm, and off silver went. That was our last $50 spike. And by the way, the circumstances, if you reach farther, not a lot of these, but if you go back to 1980, when the Hunt brothers were cornering the market, there was a rising gold and silver price environment, and suddenly this fear that silver supply would be constrained by the Hunt brothers. Okay. Same circumstances. So if we see that going forward, well, we could see silver, do as it often does. Not often, every time. Silver is always lagged behind gold and then more than caught up. These could be the circumstances that cause that to happen, but not in a crazy spike like uranium back in 2007, but more like, I think, what's happening with gold now, where silver comes screaming back up, and then at a high enough price, it does impact supply, and we see a sideways. And I think that would be tremendously healthy for the silver miners, much better than a spike.
Yeah, and I mean, then tack on my last question for you today is that we have the election coming up in about a month, and my guess, or actually, I'll bet announce the silver. The winner is going to be the printing press, because the things that the media gets caught up on, whether Democrat or Republican or is the Fed independent, I guess something that stands out to me is we're this late in the game. There's no talk. I didn't watch the debate. I have no interest in hearing that nonsense, but I'm guessing there was no talk about deficit reduction. Instead, we're seeing them fight about whether the next stimulus package will be big enough. So is it safe to say that if they were ever going to grow restraint, that it would have happened by now? And then perhaps a second part to that, I have Mike from Texas writes in, and he's wondering, if the Democrats win, does gold or silver do this? The Republic, I don't personally think that it's going to matter which side wins, because they're going to print a lot of money and spend a lot of money they don't have. Both Bush and Obama doubled the debt load. So any thoughts on any of that?
I'm going to get hate mail for this, but even under Ronald Reagan, the federal budget, I think, quadrupled by the end of his term. He didn't do it personally, Congress, but he did sign those bills.
Yeah.
So you got to be fair here, and you can't just play favorites. So I'm not taking your bet. I think our choices are not between the frugal and spendthrift parties. It's the spend and spend more parties at this point. All of the above are good for monetary metals. Which one would be faster? I suspect that a Biden win would be better for monetary metals. The perception would be that they will spend more, but who knows? If Trump is in his second term, if he wins by some miracle had more support in Congress, he would, or maybe it wouldn't matter. He's on his last. He can't be elected again. He might just open the spigots. He wants to be loved, right? He wants to forgive college debt and do all kinds of things that that Sanders has proposed. I'm going to get hate mail from the Trump supporters. But look at the facts. I mean, there is no austerity party. And yes, I do understand there's a difference between Trump and Sanders. But, you know, Trump has opened the spigots just like anybody else could have. So either way, would a Biden administration spend twice as much? Maybe, I don't know. But there's more spending either way. And in our business, I'm happy just to get the direction right. I mean, we don't need to worry about whether it's a 100% increase or a 200% increase in spending. They're increases. They're big increases. Very bullish for gold and silver.
Yeah, and well, I don't know what mail you've been getting, but I would send you a thank you letter, because if the choices were Trump, Biden, I would vote Lewis James. Vote you for chairman of the Fed too, and
I wouldn't want the job.
Lewis for Congress. And although Lewis, just before we wrap up, can you let folks know where they can find you? Again, I appreciate what you do, and I mean, I get it. Everyone has their own perspective, but at least to the degree of, I don't know, I just try and look at things logically, and that was my training on a trading floor, where maybe what I want or what I hope for or think is fair has its rightful place, but if I get what's going to happen, that is what helps in trading. You help people do that, especially with these stocks. So can you give folks the website and how they can get more information?
Sure, Chris, and thank you for saying that. I would say that in moments of depression and delirium, when I've considered running for office, it happens to me once every 20 years or so. You just get so disgusted, and you think about it. I've thought that if I ever, nobody would ever vote for me. My ideas are too radical, and if I did get in office, I'd probably be shot for doing what I think is right. But if I actually were to try, I would tell people, look, you're not going to agree with me. Neither on the right or the left, you're not going to agree with large chunks of what I say. But I hope you would trust that I'm telling you the truth. And, if I got in, then I would do X, Y, and Z. And if any of that is something you would support, then at least you would know that's what I would do. So I would, and I think that's relevant to your question here. You may hate me for not loving Trump enough. You may hate me for not bashing Trump enough. That's not what I'm here for. I'm here to put all of my experience and my network and all the resources I have to delivering as independent and unbiased analysis of companies in the resource sector and investment opportunities in this space. There is a free service, and I promise if you sign up for it, Chris can say, because he's a subscriber, I will not spam you with advertisements flooded in your inbox every day. It's a once a week email you'll get. And that's all you'll get from the free service. It's called Speculator's Digest. And of course, at independentspeculator.com, the flagship service is the Independent Speculator, the center of which is my own portfolio where I'm putting my own money. But the other thing is we have a sort of introductory service called My Take, where it's not my portfolio, it's me evaluating companies that readers request. And there's about 340 of them as of Monday's edition, where I've evaluated stocks and I update the evaluation. So it's become a searchable database on My Take on various companies that resource investors are curious about. So I encourage everybody to explore that.
Yeah, well, I appreciate you mentioned that, because we were talking how you did an investor day. I think it was the same weekend as Silverfest, so sorry I was not able to log in there. But I think it's often people just want to be able to interact, see your thoughts, and certainly, most people have plenty to do these days, so that you are focused on so many of these stocks, and have been doing it for, how many years is this? That's been a while since I started reading you. I think it was back when you were still with Casey, right? More
than 16 years.
Yeah, so I'm grateful for that. And folks, you can find out more information at the independentspeculator.com. Link is in the description field below. So Lewis, thank you again for joining me. It's going to be fun times, interesting times, and we'll have to do this again soon.
Sure. Yeah, I look forward to seeing how it all plays out, Chris.
Yeah, we will check back in. And again, folks, just a reminder, today's episode was sponsored by Bluestone. And if you'd like to find out more about what they are doing and what Jack Lundin is running there, well, that video is coming your way now.